traders, Mark here, PPT Trading Systems. It's been a long time, guys. I apologize. I have not been posting videos like I should be. I've honestly just been kind of slacking. I got a newborn at home. Life's been a little crazy. I could come up with a million excuses. Bottom line is, I just got out of the habit. I'm still trading because I've had some people have asked that question. Yes, I'm still trading, and I wanted to put a video out today just to kind of show you guys what's been going on in the room. So I've spent a lot of time in what I call the laboratory, where I'm just testing trades, looking at different things. And one thing that I'm moving towards is kind of higher time frame things. And I'm gonna try to get some trainings posted on using 60-minute charts and 5-minute charts. And I'm going to show you guys a couple things that I'm working on. I'm not going to do it in today's video. Today's video, I just wanted to kind of get myself back out there, show you guys what's been going on in the room. It's been about a year now since I launched the PPT system out to the world. It was actually back in June. Actually, I think it was about June 13th. So today might actually be the 1-year mark. And so this is an equity curve. I want to show the equity curve on the last 12 months performance. So let's just walk through this together. So as you all know, guys, there's been a lot of different events over the past 12 months. We had Brexit, right? We had OPEC, which directly affects oil, and it was a major OPEC decision, and it caused oil to go into a range that lasted. It was the tightest range that oil had seen in over 20 years. And of course, we had the U.S. presidential election. We all know how crazy the markets got over that period. So guys, this equity curve from this point all the way to this point right here is oil only. Okay. And then it was at this point right here that I added the Russell 2000 and I added some filters to oil. Why did I do that? Because I felt like some of the dynamics in the market had changed and I needed to adapt, right? I took this is about a 33% drawdown, based on a $5,000 account. And guys, just like you all, that's painful. That can really mess with you psychologically if you're not prepared for it. And honestly, I wasn't prepared for that size of a drawdown. And I had to make some changes. So for me personally, what I did was I added the Russell 2000 and I added some filters. I wanted to diversify my risk. Now, this equity curve you're looking at, this is all PPT signals with no filters. Now, at this point, like I said, I added the Russell. And you can see it still was a little choppy. Then we made up, I recovered the drawdown and then some. And then right around this area, I actually added the NASDAQ. So now I'm trading the Russell 2000, the NASDAQ 100, and crude oil. So it took a bit of a drawdown here. But remember, guys, this drawdown, while it's similar in size to this one, this is based off a higher account balance. So, to trade the three markets, you're going to need a minimum of $10,000. And so this isn't, doesn't have nearly the impact, right? Now let me show you this same equity curve, but I want to show you, so from this point to this point, the equity curve is going to be the same. But from this point to this point, it's going to show you the trades with the filters. It's over here. And you can see, here's that same point, right? So we have all of this is the same. Here's where I added the Russell, right? So the big difference is I didn't have that next push down, okay? And so it's been a lot smoother since adding the filters and adding the Russell. And now the NASDAQ. Okay, so that gives you kind of an update of where I'm at. Now, I want to show you all something. I mentioned using 60-minute charts and using a 5-minute chart for my entries. So these white lines that you see, these represent 60-minute areas of support and resistance. This morning on the ES, guys, we were trading right into some resistance here on the S&P 500. What I do at this point, guys, I have a very specific setup that I'm looking at across all 4 markets. It never set up on the ES. However, it did set up on the YM. And so I took the YM because the ES was at resistance. And here's my entry short. I'm looking for a 2-to-1 risk reward. So on this specific trade, I was risking 25 and my target was 50 and my target was hit right there. Okay. Now you can see what happened here. The YM and the ES, they all traded into a white line, which is 60-minute support. The ES broke it, the YM did not. At the same time, the Russell is also at some support, okay? Now, I don't want to confuse you guys, but what I was looking for then is, how can I enter this trade? Well, it just so happens that the NASDAQ set up at that point. The NASDAQ was the strongest of the group, so I got in NASDAQ here with a 6-point stop. First target here is 16, so I'm risking 6 to make 16. So I've got a really nice risk reward here. It's an FOMC day. I have no idea what the afternoon's going to bring, but here's my plan. I might be getting a little overzealous, but I'd love to get this target. It's 64 points. I at least just want to get this one, obviously. If I hit target 1, I'm going to move my stop to break even, and I'm just going to go for this big trade. And it might not hit till tomorrow. It might not hit till Friday. Shoot, I might get ran over right now on this bar. But so far, I had about 8 points of MFE in my favor on this trade. So we'll just see how this thing plays out. I already banked some coin on the YM. So regardless, the profit from the YM is going to more than cover my loss on this trade. Okay? All right, gang. I'm back, all right? So I'm going to try to get some training out there. I'm going to try to do a much better job of staying on top of these videos. Hope everybody's doing well, and I'll catch you all later in the week.